Welcome back to the Broker Power Up podcast, the AIME podcast for strategies, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Jonathan Haddad.
Pleasure.
We have a lot going over. We have a lot to go over today. Much like episode one, we're going to be diving into the broker buzz, so the top discussions in the Brokers Are Best Facebook group. And then we're going to do another sales pitch training where John teaches me some sales skills. And then we're going to wrap things up with story time with John. But John, there's a very important thing that we do before we go into the broker buzz. Fortune cookie.
Can you show the audience your fortune cookies as well, if you don't mind? All right. We have at least 200 to 300 fortune cookies between the two of us. So we are not going to miss out on these fortunes. I am ready to read mine. Well, apparently you have to be incredibly strong to open these.
It's yeah. I mean, it shows a commitment to the podcast, right? How many fortune cookies we got? We're going to be going a while. So you might as well subscribe so you don't miss an episode.
Listen, subscribe to keep hearing your fortune. There's going to be one of these that relates to you. I know it. Why? Because that's how they created them, was to relate to people. So today's no ops. Ooh, this is the one I needed. No obstacles will stand in your way this coming week. All right. Now, lucky numbers 5, 17, 21, 30, 39, and 40. I love this quote. One, it always feels good to read stuff like this. But you know what's fascinating about fortune cookies? It's like you could write this stuff down yourself and give yourself that same inspiration constantly.
Yeah, you could.
And it doesn't feel the same. It's kind of like that's why the fortune cookies are so popular too. I feel like you ever see those videos on YouTube where people go up to random strangers and hand them like thank you notes?
Yeah.
Yeah, and you see their reaction. It's so genuine. I feel like that with this. And yeah, look, obstacles are just that. A lot of what we do is mindset related. I think almost all of what you do is mindset related. So coming into each week, like there are obstacles for you, but sometimes you know you have all the tools needed to accomplish your week. And there's some weeks where you go in and you might be missing some tools. Things pop up where you don't have the right wrench. You don't have the right infrastructure in order to accomplish that obstacle. But as each week passes, you learn how to overcome them and you start to really develop into the human being that you are. But that's what I think about when I hear this. What do you think about no obstacles will stand in your way this coming week? What comes to your head?
Immediately came to my head that it is not my fortune and it is your fortune. Because I have an obstacle of being down a hand pretty much.
Oh, no. So, I'm sorry, man. Well,
that's okay.
The tools. You don't have the tools this week for that.
I only have one tool. But yeah. I don't know. I think one, you get a cookie with the fortune. So that's an exciting thing. But I don't know. I think just obstacles are something that you can set up for yourself, but also other people will set them up for you. And it tends to be the ones you set up for yourself are the ones that you can get through relatively easy or something that you're used to and accustomed to. And it may be those tools that you're missing are the ones that people are coming to you with obstacles that they don't have the right tools for, so they're coming to you. So if you don't have it.
You set up my story for later with what you just because sometimes you're right with obstacles. Sometimes all you got to do is look out to see who wants to help. And you'd be surprised how many people want to help and they might have the right tools that you need for that week. I think a lot about obstacles. I think about engineers. I think about architects, near and dear, right?
Architects, yeah, absolutely.
Engineers, they require a lot of skill set and tools in order to accomplish all the constant obstacles that are thrown their way. When it comes to designing the building, when it comes to the water supply, the electricity, how every single aspect works, whether it's pulling permits from the cities, these people are diving into obstacles on a daily basis. And what's fascinating is when you start to meet some of these human beings that have been doing it for 20, 30, 40 years, it's like nothing is a big deal. They just understand and they get the flow because that's just part of life. And they've learned to overcome those obstacles. So that's what I think with this. Love your thoughts on it as well. But hey, if you have thoughts on what that means for you and just your business and your life, we'd love to hear from you. So put it in the comments. We'd love to take some away.
Cool. Well, let's dive into our first segment this week, the Broker Buzz. What was the Brokers Are Best Facebook group talking about this week? Well, one thing was EPOs and EPDs. Concern from a member who recently had an EPD with an AIME lender partner. Quote, honestly, we are all pushing going the broker route and how it's better, but this kind of stuff makes me think of us brokers are at too much risk. Makes me consider going back to retail and branch managing with zero liability, especially with how much vulnerability we have at all times with loans and have closed for the 8 months prior.
So that's you love getting me into some weird spots with these questions. I'll tell you that much.
I mean, it's gossip. It's the tea.
Well, it is, and I'm going to give you, look, okay, EPOs, EPDs, right, or early payoff, or early payment default. It's one or the other. EPD, EPO, early payoff, early payment default. So basically, if a client doesn't make their first payment, is the example that is being given. Okay, that's what an EPD is. So here's what happens to people listening that might not know what it is. So if we do a loan, a transaction for a consumer is now into the house. Thank God, it all looks good. Well, if they miss their first payment, right, it could trigger what's called an EPD. So we get our money from investors. These investors are the ones giving the money. And then us as brokers are shopping with all these different lenders that could potentially facilitate and close your loan. The investors are the ones that put the guidelines in place, and they have to protect their asset because at the end of the day, they're the ones that could lose. They also have the chance to gain the most reward. I can't tell you how many people think like me as a company makes the money off interest when a loan closes. That's not how it works at all. That is not what I do. I facilitate and help close the transaction. But these lenders out there that are giving us all of this information and that the ones that are helping us close these loans, leveraging their underwriting, their process, their systems, well, they have to deal with some of these consequences called EPDs. And in the event the consumer doesn't make the payment, they get hit a fine. And what's happening is some of the lenders are saying, okay, we already take enough risk on. Why are we also going to take this risk on if a client misses their first payment? So they're saying that as opposed to them having to eat what could be the commission that was earned on the loan. So if the loan paid out commission of $5,000, you could be susceptible to having to pay that $5,000 back is what the lenders are saying. EPOs is very similar in a sense, except the difference is if the loan gets paid off prior to a certain time frame that the lender puts in their agreements. It's generally between 6 and 12 months that you'll see. So for example, Tommy closes on a home and I work with a lender. Let's just say that they have 6 months agreement. Well, if Tommy, let's just say, refinances that home within that 6-month period, well, then the commissions that me as the original loan officer made, I also now have to pay it back because the investors are saying, well, we just paid you for this loan, but now they're refinancing it less than 6 months later. We were supposed to make our money back off interest, but now we can't do that because you're refinancing the client within 6 months. Shame on you, slap on the hand. We're not paying you the commissions. Please give us back our commissions. So what lenders are starting to do is they're starting to pass both the EPD and the EPO to the loan officer. So I tried to explain that as easily as possible. Tommy, let me ask you first. Did you follow along on what I was saying there?
Oh,
okay.
Yeah.
Good. I want to make sure, right? Grasping that side of it. So
it makes sense to me, but is it because the refinance is just then a new loan?
That is correct. So you're legitimately, so when you lock in a loan, we're locking in that day's hedge, that day's pricing, just like the stock market. It's like if you bought, let's just say you bought Tesla stock today. Well, you own Tesla stock today, and therefore whatever you bought in at is what you bought in at. If it goes down, you're losing. If it goes up, you're gaining. But what you don't get to do is if it goes down, you say, no, take backsies, right? Take backsies. I don't want to do that anymore. Give me my money back. And there is a fine line. Number one, it's important that you are telling this to the consumer. I tell the consumers this. I'm very upfront with them about this. Hey, look, it is really important that when we close this loan, if someone reaches out to you or someone tries to refinance your loan, that you get in front of me first. I have certain rules put in place that at the 6-month marker, XYZ can happen. Now, I don't want that to happen, and neither do you. I'm not saying there isn't workarounds because you got to do what's best for you and your family. but please make sure you're calling me first. It can impact me and my small local business. There's nothing wrong with that conversation because it's an honest, truthful. That's really what
Yeah.
happens. So I say that the early default, right, where they're not making the payments on, y'all, that is really touchy. The lender is losing money instantly on that. I know life happens, and I know things can happen to consumers. I'm not saying that doesn't happen either. But missing your first payment once you close your home is a very dangerous territory because you are now in a place to where your likelihood for default increases based on the data and the statistics these investors have. That's why they have these rules that are so strong when it comes to things like the EPOs or the EPDs. So just pay attention to that. A tip that I would recommend to all brokers out there, a lot of lenders do this, by the way. A lot of lenders you work with, on every deal, they basically almost put aside 10% for default. Did you guys know that? Are you putting aside 10% for default? Because the truth is, you reap a lot of the rewards, a tremendous amount of the rewards. Yes, there's risk. There's risk to all business, whether you're in the retail side or the broker side. On the broker side, the difference is the reward is just unbelievable. And the amount of good that you can do in the broker side is just unreal. So put aside 10% from every deal that closes, just set it aside, put it into a separate account. And that way, when things do pop up, because it is really rare, you don't deal with a lot of issues, but you're not feeling it as much. The other thing you can do is negotiate with the lender, reach out to them, see if you can negotiate with them. I just don't see this going away anytime soon. The margin for these lenders has decreased. So the money that they're making on each deal has dwindled down over the last 3 years significantly. I'm talking cuts more than 50 to 75% cuts that have happened. So they got to protect their asset too. They don't want to go under, just like you don't want to go under. So have the conversations, put aside 10%, educate your consumers, have a ton of conversations, keep staying focused, and please stay in the broker spot. It is the place to be for your clients every step in the way. Yes, there is risk. Read your agreements too. Last thing I'll say, read all of your agreements with these lenders. If you don't like something in their agreement, redline it, send it back, and see if they'll update it. Some will, some won't, but it's up to you to have those conversations and nobody else. So that's what I got on that. It was a big topic, so I tried to condense it and make it as easy to understand as possible. So I hope I delivered on that.
Absolutely. Yeah, there's risk in everything, in every business outside of mortgage even. And it's just how you manage it. And I think setting some aside for those rare incursions just makes business sense. So, and then just also it comes down to education, right? Educating the home buyer as to what happens in the first 6 months, what to do, what not to do. But great. Awesome.
It is, man. It is. And especially, you and I, we talked about your house, right? It's like, these are the little steps that we have to take as originators to one, protect us and protect our consumers, man. Like, it's not, and that's a real conversation you can have. Like, if I said, Tommy, hey, listen, there might be people that reach out to you over the next 6 months. I understand if a life event happens, God forbid, you have to sell the house, things happen with your family, you lose a job, God forbid. I get that. But if someone's reaching out to you to refinance or do something, can you do me a favor and make sure you call me first? And the reason why is there's potential risk to me and my organization that the monies that was earned on this loan that I helped facilitate and get you into the dream home, they could ask for me to pay it back if this loan is paid off prior to 6 months. So if you could just do me that favor, just call me, talk to me. If there's something I can help with, maybe we can negotiate with the lender that we closed your loan with. But please, can you do me a favor and just reach out to me? You just help someone get into a house. You think they're going to tell you no? To that?
Yeah, absolutely. I mean, if I was told that, I wasn't told that. But if I was, yeah, immediately I would just go to them. Like,
it's happened once to me. Like, I've done this for 12 years and it has happened one time. It is what it is. Clients had to sell, had no choice, and I had to pay it. So what are you going to do?
yeah. All right. Well, let's move on to our second question. The next most discussed topic, land loans, the good and the bad. Fill me in, John. What is a land loan?
Yes, a land loan is exactly what it sounds like. So you find a piece of property that is just the land itself. So there's no house on there. There's no RVs. There's no mobile manufactured home. It's literally just the land. So land loans. So what I want you to think about is, again, everything that we do here on the mortgage side is risk-based. Risk analysis. There's millions of data points that have been acquired over 100 years of this data being collected. So land loans are risky to investors. So why are they risky? Okay, here's why they're risky. Imagine, God forbid, something happens in your life and you lose a job and things start to go south, God forbid. Well, your primary residence, you're not going to stop paying on, right? You're going to try and make that payment as much as you can because you don't want to get foreclosed or go bankrupt. But if you have just a land loan on the side that's $100,000 and your payment's $600 and you need it, what's the likelihood that you just stop paying on it? It's really high. It's actually absurdly high with the data that we have. That's also why investment properties are higher priced, right? It's higher interest rates, more closing costs on investment because it's more risky for the investors.
That makes a lot of sense.
Yeah, and they're saying, well, if you, God forbid, things go south for you, we know you're going to stop paying on this investment property. So that's why investors, they look at things like equity. So if you put more money down in many situations, they'll give you better pricing even on an investment property. And that's because they now have the collateral. So the risk for them is really low. So they're like, okay, even if this person defaults, I have 50% equity in this house. So even if they do, at least I have the chance to recoup my asset and make money. So land loans are super risky from that standpoint because what's the likelihood the client actually starts to do something, starts to build a house? Like, how long does that take? Usually people will sit on land and then build it many years later, whatever the case might be. I'm actually looking at land myself for my family that I want to build on in 5 to 10 years. So the pricing on these loans is difficult to come by because a lot of lenders don't want to take that risk on. There are lenders in the broker space that will do it. But they're going to require 20, 30, 40, sometimes 50% down when it comes to that land loan. You can also look at situations that might make more sense for your consumer. Look at a credit union. Have them reach out to a credit union, one that they might have money with. Ask them to move some money to a credit union. See if that helps them. Credit unions are borrowing their own money, and they're basically leveraging the money of the members that are putting in there to give certain loans like a land loan, which you can see that's more common on that side of things. Now, if you're planning on building on the land, there are way more options to plan on building. So you can buy the land, but at the same time, you're basically putting in a bid to build your house. So you can do actually a standard loan at the exact same time when you're buying the land. That has a lot to do with like construction loans. So there are so many different ways to do it, but it is a risky product, and it's really risky right now in this environment, how volatile it is. You'll start to see a lot of these loans come back as interest rates start to go down because the risk starts to decrease as rates go down. Why? Well, the payments drop. So it's easier, and the rates are just so low, obviously. So land loans, fantastic. They make sense. Just be educated on them. Be able to educate your consumers. And if you're a consumer listening, just ask the questions to your mortgage broker. Ask them about all the ins and outs. They're going to know. They'll point you in the right direction every step of the way.
Awesome. Yeah, that answered all the questions I had. So let's move on to our final question for this week. Who has the best training program for an LO to learn about commercial lending?
So I did commercial personally. I did it for a year, moved to California, got my DRE license, did commercial real estate, learned the lending side quite a bit. Commercial lending is very heavily relationship-based business, okay? The reason why there isn't, by the way, it's so archaic you wouldn't believe it. Like they still live in the 60s and 70s with how they do stuff because it just works. It really does. I don't know why it works, but it does. But I did it at a high level, learned a tremendous amount about commercial. And it's all relationship because it's risk-based. Some of these deals that come in, a lot of the ones I see in Brokers Are Best are these wild one-off deals, right? Like somebody who wants to turn a barn into a church but has never built a church before.
I've seen those.
Yeah, right. And I'm not like saying it to be funny. Like that's great.
No.
Love that wants to do that. But the amount that goes into that, it's like, okay, so now you want to walk into a bank and think about it like this, Tommy. Okay. So I want to go and borrow. Let's just say I want to borrow your computer. You got a gaming computer you and I talked about, okay? Super expensive one. Let's just say I said to you, "Hey Tommy, I've never done this before on the computer, but I'm going to come in here. I want to sit down, play games, and I want to put I like to have my water bottles open. I want 6 of them on top of the counter here. And then I like to eat my fries on the side and still use my keyboard while I do it. What's your brain doing already in your head?
No.
Oh,
cringing, just
to me.
straight cringing.
And I know that because I game a little, right? Like those little
Yeah.
keyboards got to be.
Oh, the fries, the water. I was like, it should be fine with my case. And then you said the fries, and I was like, no.
No, I'm out because
No.
right?
Yeah.
And so just think about it from that perspective. Now imagine you're the investor. So imagine a loan officer's coming to you. Make yourself the investor for a second. And this loan officer says, "Hey, I have a client who wants to do commercial." You say, "Okay." They want to turn a barn into a church. Okay. They have zero experience. Okay. And they can only do 15% down. Okay. You're asking me to give you all this money to do the construction on the home. You want to only put down 15%. You've never done it before. And if this thing fails, you're basically saying like, whatever, we'll figure it out. So commercial is relationship driven. You have to prove that you can execute and deliver on a consistent basis to these lenders. We have our own connections and relationships at my company that we've built over time to do that. But once you go and you prove yourself to like a banking investor, a specific bank, a credit union, a wholesale lender that might do it, commercial lending, it's easier to start getting that products because you've proved that you're delivering, and the clients you bring in are clients that are paying on time. That's what these people want.
So that's you, the broker, not this person has done it before.
No.
Has this person, if that person had done it before, does that matter at all to the lender?
It can. It makes your likelihood stronger, right, from an approval standpoint, because they can prove that they've done this on countless occasions. But we get a lot of these, especially on the commercial side. You have to build relationships. You're asking for one-off products when you've never done it before. And there's someone out there that she does a wonderful job. Her name, Chris with a K. Everything she'll post with just a K on there.
Oh yeah.
She has crazy relationships where she's done weird loans that I didn't even know you could do, whether it's horse farms, golf course, like whatever it is. So she's done a wonderful job, but she's built these relationships with people. And when I've talked to her people, like they know her, they trust her. She's delivered for them on multiple occasions, but she's building that brand and the trust amongst all these lenders that do commercial. So you got to get out there. You got to network if you really want it for your clients. You can't just go in assuming you're going to get a product when you've never done a commercial loan before.
Makes a lot of sense. Mm-hmm. Yeah, commercials segment I never got close to. So no, very little about, but that informed quite a bit actually. And answered a lot of questions about things that I've seen in BAM.
I'm trying to give you context here as much.
Oh, yeah.
And yeah, you're asking. These are good ones too, by the way. Like these have been up my alley.
Awesome. Well, that does it for the Broker Buzz this week. We're going to run a quick ad, and then we'll be back with some sales pitch training. Stay tuned.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com AIMEgroup.com/membership. Your community is waiting.